Markets in turmoil, gold prices soaring, and trade wars heating up. What does it all mean for your investments? This week, the global financial landscape was rocked by major developments, from the U.S. imposing massive tariffs to a surprising ECB rate cut. Buckle up, because we're breaking down the biggest financial stories of the week and what they mean for you. The United States has once again shaken the global economy with a sweeping round of tariffs on key trading partners, including Mexico, Canada, and China. These tariffs impact over $1.3 trillion in trade, making them one of the most aggressive moves in recent economic history. The justification? Protecting domestic industries, reducing trade imbalances, and using economic leverage in geopolitical negotiations. But the market reaction has been anything but calm. The Nikkei 225 in Japan plunged by 3%, and European car stocks took a beating, with automakers heavily reliant on the North American market feeling the squeeze. Meanwhile, the US dollar has strengthened as investors flock to safe haven assets, a move that could have long-term inflationary consequences. American companies now face a critical decision: absorb the extra costs, pass them on to consumers, or shift supply chains, each option bringing its own set of risks. Inflation concerns are rising as tariffs drive up import costs, making essential goods more expensive. And with elections looming, this trade policy could become a major economic battleground. In the tech world, China has just thrown down the gauntlet. The launch of DeepSeek AI, a revolutionary artificial intelligence model, is sending shockwaves through the industry. Built to be both powerful and cost-effective, DeepSeek AI is positioning itself as a major competitor to Western tech giants like OpenAI and Google. Investors are already feeling the impact. Nvidia's market value plunged by a jaw-dropping $600 billion as traders reassess the AI landscape. This development is part of China's larger strategy of technological self-sufficiency, aiming to break free from dependence on U.S. tech and establish dominance in AI innovation. The global AI race is heating up, and with China aggressively investing in research and development, the balance of power and tech could shift dramatically in the coming years. In a move that caught many by surprise, the European Central Bank, ECB, slashed its key interest rate by 25 basis points to 2.75%. The goal? To counteract slowing economic growth and boost borrowing and investment across the Eurozone. The decision reflects growing fears of an economic downturn, amplified by external pressures from the ongoing U.S. trade wars. While lower rates could stimulate economic activity, they also pose risks, such as devaluing the euro, making imports more expensive, and potentially sparking inflation. The market response has been mixed. European stocks initially rallied on the news, but concerns over long-term financial stability persist. Critics argue that persistently low rates could hurt savers and weaken the banking sector, leading to unintended consequences down the road. Gold has always been a safe haven asset, but with rising global uncertainties, its appeal is stronger than ever. This week, gold prices surged past $2,800 per ounce, reflecting growing investor anxiety over inflation, geopolitical tensions, and market volatility. The surge signals a broader shift. Investors are pulling away from equities and moving towards commodities that retain value during economic downturns. With uncertainty surrounding trade wars, interest rates, and even political stability, gold is becoming the asset of choice for those seeking financial security. But is this just the beginning? Some analysts believe gold could hit new all-time highs, especially if inflation pressures continue to mount. For investors, this might be the time to rethink portfolio allocations. It's not just markets making headlines. Sports betting is reaching new heights, with the upcoming Super Bowl expected to generate a record-breaking $139 billion in wagers. This explosive growth follows the widespread legalization of sports betting in multiple U.S. states, turning what was once a shadow industry into a booming sector. Beyond the cultural significance of the Super Bowl, the betting surge signals a major shift in the American entertainment and financial landscape. States are raking in tax revenues, sportsbooks are thriving, and the public is increasingly engaged. However, concerns about gambling addiction and regulatory challenges are growing, raising questions about the long-term sustainability of this market. From high-stakes trade wars to gold hitting record highs, this week has been a whirlwind in global finance. But what's next? Will tariffs continue to shake up markets? Could AI disrupt the tech industry even further? And where do you stand on the ECB's rate cut? Let us know in the comments. If you found this breakdown insightful, hit that like button and subscribe for more deep dives into the world of finance. See you next time.